Flourish Ventures, we are an early stage venture fund with a purpose, and that purpose is financial health of individuals and small businesses. We invest in fintech companies, seed, Series A, sometimes Series B across the globe. We have a portfolio of about 80 companies, $800 million of assets under management. We do US, Latin America, India, Southeast Asia. I lead our work in Africa and Middle East, also do a bunch of global cross-border payment infrastructure work. And really, I said that it's a fund, but it's not. It's an evergreen investment vehicle. We have a single LP who's Pierre Omidyar, who's the individual who founded eBay. Pierre has different parts of money, and this part of money is the tip of the spear. So we take disproportionate risk with this part of capital to advance entire sectors forward, which means that we will invest in the first or second movers in frontier geographies, in difficult segments, because we want those companies to be commercially successful, but maybe more importantly, we want that sector to move forward. And therefore, you have me sitting here investing in payment acquiring companies in Nigeria. I serve on the board of a company called Lendable. We are a wholesale capital provider to fintechs in emerging markets, $300 million of assets under management. And we lend to several payout companies that facilitate remittance payouts in emerging markets. So these are companies like TerraPay, Toons, Niem. We actually finance the working capital. These companies need anywhere between 3 to 5 days of working capital. From Lendable, we would provide that working capital at 13 to 14% dollars. And so 14% for 3 to 5 days, you're looking at 10 to 15 bips. And that of 40 to 80 bips gross margins of these companies is a very significant cost. And so if you can move out those 10 to 15 bips from the P&L of these companies, the business changes entirely. You break even 3 years faster, and it's just a very different business. And that's what stablecoins do. So these companies are gravitating to stablecoins not because of some smart contract or because it's because they don't need to hold free funds in 7 countries that is costing them real money. I'm excited about a lot of very old traditional remittance shifting to stablecoins. What am I talking about? I'm talking about Ria, Western Union, MoneyGram. We're leading around in a company that does payouts for Ria, Western Union, MoneyGram in Sierra Leone, Guinea, and Liberia. It's huge business. We often miss this because we live in developed countries mostly. And so we don't see the RIA shop every corner, but it's there, right? So I'm thinking of $200 to $300 billion of remittance from these old guard players moving on chain over the next 2 to 3 years. That's huge already. I'm thinking that a new breed of companies needs to come up to solve the KYC, AML, CFT compliance issues that we will have on chain. We're leading around in a company that's trying to graft this out for cross-border payments. And finally, I am excited about the marriage between stablecoins, blockchain wallets, and agentic commerce.